Okay, it is now 9:05. We're just going to start as everyone kind of trickle in. They'll just catch up. So at first, I want to introduce myself. My name is Tina Chi. I am with the Fremont office at Benchmark. I've been in the industry for 12 years now. So I started when the last crash was happening, right in the middle of it. So I'm sure you guys wonder all the time, like, when is a good time to start real estate? Is this a good time? The answer is always yes. So since I started when it's crashing and everybody's leaving, as long as you know what you're doing and kind of get ahead of the game where you're looking and sourcing your clients, there's always going to be business in real estate because people need a home. The only difference is that your clientele changes, so you have to shift with that. This training is going to be about an hour. I know everybody has very busy lives, so we'll try to stick to that time frame as much as possible. But of course, if we need to go a little over because I need to answer some questions, that'll be totally okay. And if you need to get somewhere once the hour is up, feel free to leave. That's okay as well. So today we are going to talk about managing your money. So in your other courses, you've learned about how to grow your business and how to run your business. The goal of our time today is to teach you the habits to build a financially sound business. We'll be employing techniques and models used by the most successful real estate agents for managing how each commission check is handled and how we can use our money to build a bright future for ourselves in real estate. Now, I want to ask all of you to think back to the classes that you've took, while you're getting your real estate license. Do you remember learning on how to handle your finances as an agent while you're studying for your license? I do encourage.
Can you repeat that, please?
Candace, does anyone remember? It's a quiet group today.
Yeah, no, I don't remember a class on how to handle my finances. So this is great. I'm looking forward to the content today.
Sure. Yeah, and absolutely. So, when we get our licenses, they don't teach us how to run the actual business. Sure, they teach us the verbiage, of what, a township means and et cetera, things like that. But none of the materials really teaches us how to succeed in this industry. And that's exactly what we're going to go over today. So Keller Williams is known for models, systems, and technology. So naturally, KW is going to offer powerful tools driven by technology to help you pursue your personal and business goal. So using the proven model and the tools of the Millionaire Real Estate Agent, the MREA, it's going to help you to have a smart and sound business. Does everyone have the book, the MREA book, or have read it?
No, how do you get, or where do you get the MREA book?
Sure. So I definitely encourage you to talk to your team lead. Sometimes every market center will be different. They might have it on hand and you could borrow, or they might, supply one for you. And if they don't have it, they could show you where to purchase one. Okay. So all of the models that we talked about here is in the MREA, and it's going to be spelled out in detail as well. But we're going to go over that today as well. Okay, so the first thing that we need to talk about, when you start out your business, is that you need to set a goal that funds your big life and pursue the activities to achieve it, right? So everyone getting into real estate, they, see the big check after you do a closing, in the Bay Area. I don't know where you guys are at, but, Bay Area, average commission is probably around $20,000, right? So a lot of people think that they close a deal and they get $20,000 in their pocket, or $9,000 or $10,000, wherever you're at. That's the average, that's what they think that they're making. But what people don't end up doing is that they don't estimate or save for for taxes. So a lot of agents scramble when it's time to pay for taxes because they've spent all their money, because there was not, they did not plan it ahead of time for that savings. So then tax season come, now they have to pay this big tax bill, and they don't have anything left. So that's the reason why we have to use the proven models and system of the MREA chart of accounts to help you make sure that you're ready for the taxes or for budgeting for your marketing, etc. And you know exactly what you should be spending on, and how much your take home is, because that's the only way for you to know how many transactions you actually need every year to supply, to supplement for the life that you want. So we need to be, number 4, be fiscally savvy by reviewing your financials monthly, so that you are aware where you stand, and if you're falling behind in your business and need to pick up or adjust things so that you can hit your goals. And number 5, this is something that majority of the agents, a lot of the agents don't do, and I highly recommend that you guys pay yourself a salary. Okay. And this has a lot to do with setting up your business and correctly. And I highly recommend that you talk to a CPA on how to do that correctly. And that way, how much you're making on a salary to pay for your monthly bills at home, your personal expenses, right? And that way you'll have enough. And number 6, of course, you have to start preparing now for a financially secure future. Like I said, I've been in the business for 12 years, and I was on the same path as everybody else in the beginning. It took me a while to really get the system down. And the reason for that is because I did not have anybody to train me or even teach me about any of these things here at Keller Williams is teaching. No one taught me about how to run the business, how to set up an entity, or that I even should set up one, that I need to pay myself a salary, what is my actual take home. There was zero training for when I started. So I bumped my head a lot, and kind of just had to make mistakes and learn from them as I go. Now, that's definitely not the best way for anybody to learn. So if you guys are new or just starting out, you're at a great place because you're starting on the right foot, so that, I took a few years before I really got the hang of it, and you could get started on year 1 to do it correctly. So what is the purpose of business in your eyes?
To make money.
Yeah, exactly. To make money, profit. So, and with profit, you have the money to do good for your family and your community, right? So when you set your goals, you become keenly aware of how many transactions you need to close to reach your financial goals. So that's something that I mentioned earlier, and that's why this is very important. So this is the money that you'll use to fund your big life to do good. And today we're going to talk about financially sound business practices that you can incorporate into your business from the start with every transaction that you close. And this begins with the understanding of how the money you make from each transaction contributes to a financially sound or financially unsound business. Here we have 2 scenarios. One is financially sound and the other one is unsound. And I kind of briefly talked about it earlier, but this gives you a little visual. So this is also on page 4 of your participant guide. And this represents a scenario where, let's say, a solo agent, Jessica Campbell, and she closes on a home and her share of the commission is $9,000, right? And is $9,000 the check that Jessica receives, is that a profit or income or revenue? And the answer is it's income. So a lot of people have the difference between income and profit mixed up. So the profit is what is left over to fund your business, your taxes, and your personal life. So it's important to understand, the difference between the two. So in the first scenario, like I said, she sold $9,000 in commission. Of course, your broker takes a cut, and then she takes home $5,760. What most agents do is they pocket that $5,000 into the bank. They think they made it, and then they start using it for any expenses that comes along without any real budgeting, right? So there's no business savings, there's no tax savings. And then the second scenario, if you actually break it down, she gets the check for 5,000 something. She puts it into her business bank account of 1,728, and then personal bank account of 4,000. So that way it separates two. You should always have two separate accounts, okay? And you don't mix them. And then from the personal accounts, you still breaks it down even more because you need to pay taxes, right? So, doesn't matter where you work, your taxable income, Uncle Sam takes a cut. So even if somebody makes 200,000, that's not what they take home, right? So you have to take that into consideration because in our business, we don't pay taxes up front. We pay taxes later. Now, the correct thing to do is to prepay your taxes quarterly, okay? But we'll go into that more in detail. So you put some into your tax savings. There's state and federal taxes, and then also self-employment taxes. This will, depending on how you set up your business, it will be a little different. Again, I would suggest you talk to your CPA. If you set up your entity correctly, you will not need to do self-employment taxes. It's only if you're sole proprietor that you do. Now,
Tina, quick question here.
Sure.
How do you decide how much to put into the business bank account versus the personal bank account?
Yeah, that's a great question. And that's something that we're going to go over in the future slides.
Okay, sounds good. And also, if you could touch base upon why it is advantageous to pay yourself a salary versus just taking all the profits.
Sure. So, we're employees of our own business, right? And so when business get really busy or when funds come really low, the first thing we forget to pay or the first paycheck we cut is ourselves, right? But if we hired somebody, it doesn't matter what business, you always pay your employees. So you always have to have the mindset that we're an employee of our own business and we should not cut ourselves short. So we need to pay ourselves a salary. And that way it comes down to planning. That way, then you will be able to plan your whole year correctly, include it so that they could live their life. And then everything that's extra from the business, it's extra. That's going to fund your big life, right? So you need to pay yourself a basic salary.
Does that count as a business expense when you pay yourself a salary?
Yes. If you set up your business correctly, it is an expense.
Got it. Thank you.
And then, okay, anyway, so in between these two scenarios, I'm sure you guys could automatically tell that the first one is not a financially sound business, and then the second one is, right? So the first person will take home 5,760 home. They have no idea how much they really need to make for the year to fund everything. No budgeting is taken into account, like how much marketing do I need to do to grow myself? There's none of that involved. While the second one, you can see her actual take home, in her wallet is only $2,419. So that gives you the perspective of, wow, she's nowhere near where she needs to be if she needs, let's say $50,000, right? The difference from 5,000 to 50,000 and only pocketing 2,000 to the 50,000 income that she wants is very far, and the transaction numbers is going to be very different. So this is what we're aiming for with this class, for you to understand and embrace a SMART model that grows your business, pay your taxes, and fund your life. So kind of went through that on the previous slide, so that we'll go over it again. Transaction $9,000, 5,760 is your net paycheck, and $2,419 is in your pocket. And this is when expenses and taxes are accounted for. Now we're going to talk about the actual model and how that breaks down. So for simplicity purposes, the MREA always talks about the percentages here, comes from the study of best practices of hundreds of top agents. Of course, the percentages are important because they help you evaluate the health of your business. The idea is to drive a 40% to the bottom line. So that's the margin, right? And this is a huge margin in comparison to any other business. I'm not sure what all of your background is. My background, I grew up in the restaurant industry. We're lucky if we have a 30% margin. Most of the time we have a 20% margin, right? So for real estate, we're aiming for a 40% margin, right? At minimum. Okay, so for your expenses, we have your cost of goods. Cost of sales, and that's accounted for 30%. And then operating expenses, that's also 30%. So that brings you down to your net income or net profit of 40%. So for an example of $10,000 GCI, your gross commission, cost of goods is $3,000. I keep saying cost of goods. Now I got restaurant stuck in my head. Okay, cost of sales is $3,000, and your operating expenses, is $3,000. So you'll profit $4,000, not the $10,000 that most people have in their mind. Okay. Now we're going to talk about the flow of money. Now let's see, how it applies to you in your real estate business. So let's see. What formula is commonly used to calculate the profit of your business? It's fairly simple. It's income minus expenses equals profit. So while the formula to calculate profit is important, it is not the model we use to set and track our profit goals each month, or even quarterly or annually. Instead, we ask ourselves the following strategic questions. These questions can be found on page 7 of your participant guide. And we'll go ahead and talk about them right now. So how much money, the questions you need to ask yourself is, how much money do I need in my bank account at the end of the year? And how many homes do I need to sell to achieve my profit goal? And how can I minimize my expenses to maximize my net income? So you need to figure out what your goals are, your expenses, and then how many homes you need to sell. Income in your real estate business can really only come from a selected number of sources. So it's mainly listing income, sales income, referral income, or leasing income if you do rentals. And this is everything that's going into your business. Now let's talk about cost of sales. Earlier, the cost of sales is calculated at 30%. Of course, this number will change. That's just because every market center charges differently and every brokerage just charges differently. So we came up with 30% so that this model could be applied to everyone in the industry, not just Keller Williams. But for our purpose of this teaching, cost of sales for us is the commission that you pay to your market center, and also the royalty fees. Okay, so so the more you sell, obviously that 30% number is going to go down, because we all in Keller Williams, we have a cap, right? So that's the maximum you'll be paying. Now in the beginning, you'll calculate it based on 30%. As soon as you hit your cap, that number will shrink down dramatically the more transactions you sell. So let's dig into the cost of sales a little bit. This is just kind of help you calculate on your transactions depending on where you stand right now on your annual cap. Let's say that you have not capped yet. The first scenario is if you have not capped yet, you would put your gross commission income on the first box, and then you're going to minus your whatever your split is. It's usually 30% for the market center, right? That gives it to your market center. And then the royalty, which is 6% for the Keller Williams KWRI, right? The main company. And then that will be your actual net after your cuts. Now, in the second scenario, let's say that you already capped and maybe you still have royalties to pay. Then you will subtract whatever royalty that you have left. Our cap for the royalties across the board, $3,000, right, for everyone. And then once you max that out, then you go into the third category. Like I said, your gross commission income is what you're going to be taking home once you cap. So now that we've covered the models, let's see how you can plot your course to the bigger future. Let's see. So the next activity, you'll want to get out your calculators and use a calculator app on your phone. We'll run through examples of it and then see how it comes out for your business. So this is on page 10 of your participant guide. And then, we'll follow along and then we'll go through the calculations together. I want you to write down your annual net cash goal. What that means is what cash do you want in your pocket after taxes? After taxes, after expenses, whatever you want, whatever that number is. Write that down first. For the sake of for this slide, we're going to just say, we want $100,000 in cash after everything. And this is what you take home after Uncle Sam took their money. Okay. Now everyone's tax bracket is going to be different. Again, talk to your CPA. For the purpose of this exercise, we're going to use 40% for taxes, which is extremely high. I will let you know. Okay, so most of us not going to be in that range, especially not at 100,000. But just for the purpose of this, we're going to divide that by 60%. So you use 100,000 divided by 0.6. Okay, so that's 40% taxes taken out. Of course, if you're, calculated based on 30% taxes, you will, divide it by 70%, right? Or 80%. So 0.8, 0.7, however you want to do it. But for this calculation, we're doing it 40% tax bracket. You will end up with a net profit of $166,666. This is the number that will show up on your tax filings as taxable income. Okay, but this is not the number of your gross commission. This is very different than your gross commission income. From there, to divide this 0.4, and you should get, I moved a little earlier, and you should get 416,666. And that is your actual gross commission that you will need in order to get $100,000 net cash after your expenses, after your cost of sales, after you budgeted into your marketing expenses and etc. Right? This is everything. Of course, again, like I said, the tax bracket numbers is on the high end. The cost of sales is overall 30%. Now, if you capped, it's not going to be 30% of 416, right? But for the sake of math, that's what we're using. Okay. Now, once you have your gross GCI, you're going to calculate how many transactions you're going to need in order to hit that. So for this purpose, we use an example with $7,500 per transaction for this area. So you take 416,666, you're going to divide it by 7,500. On your end, depending on what your average sales is, divided by that number, and you'll get 56 for this scenario. You need 56 transactions in order to make this happen. And from there, you calculate your royalties and your cap. So this scenario is $23,000. They use a $20,000 cap for the market center and a $3,000 royalty. And for the expenses is 30% of the gross commission income. So you want to take your gross commission income and then times it by 30%. So multiply by 0.3. That's the money that you'll need to spend on your business. And if the reason why we say you need to do it monthly is because if you overspend, you need to look at where you need to cut down. Okay, you don't want to go over this number. Does anybody have any questions about this so far?
Doesn't sound right to me that the gross
Oh, sure,
commission
sure.
400,000 and you're netting 100,000.
Right. That's the reason for this one is because we are calculating things on the high end. Remember, I said that we're calculating it on a 40% tax bracket for this scenario. Your tax bracket is not going to be 40%. No one's tax bracket is 40%, right? So you should be netting more than that, but you always want to calculate at, in a way, worst case scenario, right? So if I put this into a real life scenario, if you're aiming for 400,000 in GCI, you're going to make more than that, but that's your bare minimum. It just kind of gives you going. No one's going to be sad if they have extra money left over, right? Same thing with the 30% cost of goods, cost of sales. This one factors in the 30% cost of sales, but in reality, your cost of sales is only $23,000.
So
Does that make sense?
You don't pay taxes on any expenses, right? You only pay taxes on your net income.
Right, which is that net profit goal right here. So let's say your tax bracket is 30%, and then it's 100,000 divided by 0.7. I use 0.6 on this slide.
0.6.
And that will be your taxable income after your expenses from your business side. So any marketing expenses that you used, if you pay for staging, pay for advertisement, all of that's going to go out. So that's going to be taken from actually that $400,000 gross commission income. Mm-hmm.
Okay.
But for budgeting purposes, we always calculate things high so that you have a higher goal to hit, right? And if you end up having more money on the business side or the personal side, everyone's happy.
Okay.
So now you know where to go. Let's talk about how you're going to get there. So in your participant guide on page 11, you'll see this short checklist of the best practices. This list is not exhaustive by any means, but it is a great way to put yourself on a path that will ensure your financial well-being. So you may be able to check off the first items on this list, given your experience that you had in the SPARK goal settings. I believe you guys took that, and in today's short goal exercise. So let's go through the list and briefly talk about the importance of each. You must gain clarity on your big life hopes and dreams. A lot of people comes into this business and they don't have a goal in mind. Maybe they're just thinking, oh, it's my first year, I just need to for whatever transactions, right? What you really need to think about is, what is the reason why you got into this? What is your ultimate goal? You have to start with your ultimate goal and work that backwards, because that's the only way for you to really narrow it down on what you need to do. Otherwise, you're just kind of going blindly through. And if you don't hit your 2 to 3 transactions, then what happens, right? So you definitely need to figure out what your big dreams are, because that's your motivation. And then set your personal and business budget. You always want to do that right in the beginning of the year. If you haven't done it right now, do it now. Lay out what your monthly expenses are on the personal side. Lay out what your monthly expenses are on the business side, or how much you would like to spend on the business side, right? It may be very low if you're a new agent. We always say to spend as little as possible, right? Don't go out and buy every single shiny thing that tells you that you're going to get a lot of clients. Definitely do not recommend that. Exhaust all your free options as much as possible. In reality, it actually doesn't cost that much to run this business. The only time you really should be spending money is if you're running a team and you need to buy a lot of leads online to give it to your team. But if you're a solo agent, your business budget should not be very high for marketing. You should instead do more of like the sweat equity, right? Build relationships, talk to people. None of those really cost anything, but it's going to cost you time. And that's what's going to really help you succeed. Okay. Set up your business entity, like I mentioned before. Most people is run as a sole proprietor, And when you run as a sole proprietor, your tax bracket and the way you're being taxed is completely different. What is considered expense and what is not is also very different. For instance, right off the bat, you're going to have to pay a 17% self-employment tax that you cannot get away from. If you set up your business entity, that goes away. And also the things that you weren't able to write off or only could write off a portion of it under this sole proprietor, you can now write off 100% of it. Okay. So, but again, it really depends on where you are in your business right now. I highly recommend you talking to your CPA. Your CPA would tell you, at what point, of your business is the time for you to actually set up the entity so that you could save more money. Okay, there is a limit. So I wouldn't say jump to do your business entity right away when you have 0 sales. Okay, so but talk to your CPA on how to set it up and when it is ready. When you have the transaction amount that is ready, you'll know to call them to get that done.
I have a question about that.
Sure.
I don't know if you know the answer. What if you're part of a team? Like, is it still like your own business entity when it comes to deductions?
Sure. So it really depends on how the team is set up. So there's so many different team models out there. Some teams, you're on a team, but you're still responsible for your own expenses. Like you use their team name or something like that just for the just because the name sounds good and it helps you get clients, right? But they don't actually supply you with any leads. They don't actually pay for your expenses. In that case, this applies to you the same way that, exactly the same way. So you would set it up your side as your own little entity separate from the team just for tax purposes. And then you could do the write-offs. Some teams is where, you don't need to do your lead gen. Oh, well, not necessarily. They still give you the leads. You don't need to go source the leads, but you still need to do follow-ups, right? And then they take the expenses on,
Okay.
I have another question.
running all of that, where you will be, sure. Oh, hold on. Can you guys hear me?
I can.
Okay. I'm just going to finish that one thought and then I'll let you ask that question. So in that scenario, you will still be able to write off an expense such as your gas mileage, because that's something that your team isn't paying for unless they opt to pay that for you. Then you have no expenses. Otherwise, you still write off whatever expense that you have, because even though you're on a team, you're still paid by a percentage of a commission. Does that make sense?
Yes, thank you.
Okay. Gregory, you had a question.
Yes. What about setting up an LLC?
Sure. Yeah, and that has everything to do with the business entity setup. It depends. I'm not a CPA, and I don't know your personal scenario. Majority of the agents sets it up as an LLC or an S corp, or an LLC filing as an S corp. So that's the general, the usual entity setup. Okay, but you will talk to your CPA depending on your personal finances, on how you want to do that. There's pros and cons with each, and it also comes down to where do you see yourself in the future in the business, right? So in short, if your business goal is really big, right, you probably want to do an S corp, because tax advantages, the more you make, the more advantages you have on the under the S corp scenario. But if your goal is, a little smaller, LLC is better, because it actually, once you hit a threshold on the LLC side, you actually pay more taxes the more you make. That's kind of just a general thing. Again, talk to your CPA. They will be able to go through your scenarios and talk to you about where you want to go in your business, and then they will recommend which one is best for you.
Okay, thank you.
Tina, one more question here.
Sure.
Since we touched upon LLCs and S corp, if I don't have again, I'm starting right now. So if I don't have any assets, any contractors, does it still make sense for me to have an LLC maybe as an S corp and still pay that LLC fee every month, or sorry, every year? Or can I just start like a sole proprietorship DBA, the fictitious business name?
Most people start as a sole proprietor. So I mentioned earlier, it's not. There's no tax advantage if you don't hit a certain limit on your income for the entity. So you need to make sure that you hit a minimum income first before you set up your entity. Okay. Otherwise, you end up actually paying more because of the fees and etc.
Got it. Okay.
And is the S corp, is that the same amount as the LLC? Which would cost more to set up, an LLC or an S corp?
I think they're about the same. I mean, I'm not an accountant, and I think they charge differently. But I actually don't know the fees on that one, to be honest with you.
Because the reason I asked, because I was told that I wanted to set up an LLC, and someone suggested that if I'm not making, over a certain amount of money, that it wouldn't make sense to set up an LLC yet, just to set up sole proprietor. Is that like where I should be at, since I'm such a new agent and I'm not bringing in a ton of money?
Right. Yeah. So it doesn't matter if you're doing an LLC or an S corp. You need to make sure you make a certain amount before you do so. So So the answer is to both. Yeah, you need to make sure you hit a certain income limit before you set it up. Otherwise, you'll just waste money, right? You'll end up tossing more than you do. Okay, but once you hit that minimum amount, and you're going to go over it every year, then you want to get the entity set up, because that's when you're actually saving money under the entity and versus the sole proprietorship. Okay.
Okay. Thank you.
But it doesn't matter which way. Doesn't matter if you're sole proprietor, LLC, or S corp. You have to make sure that you have, the additional bank accounts or separate bank accounts, so that you could keep track of those fundings, right? You want to be able to separate your personal and your business, and what are the tax money that you're putting aside for your taxes. You want to keep that separately. Because when you have it under one account, it's so easy to just, I have this bill come in, I'll just pay for it. I have, this much money in my bank account. You see a bigger number, and now all of a sudden your need to spend comes, right? And you can't stop yourself. And next minute you're spending on, whether or not it's business or personal, you're spending on things that you really shouldn't, that you technically don't have the money for, because they're actually saved for future usages, right? So you want to separate those accounts.
Tina, I have a question.
Sure.
Hi. For putting your tax money aside, are you saying that would be, for example, like personal is one, business is one, and the tax account would be a third? Or where do people usually set aside their tax money? Do they set aside this account?
If you're a sole proprietor, you don't need to set aside two different ones, just one account for tax, because you're filing under one. Okay. But you do need a personal and a business account, so that you know that what goes in and out of each, right? So you need three: a personal account, a business account, and a savings for taxes, right?
Okay, I see. Thank you.
Yeah, but if you have an entity set up, then you actually need 4. So let's say you have an LLC or an S corp, you'll have a personal account, right? And your personal savings for taxes or for whatever, right? And your business checking account that goes for things that goes in and out and expenses, and your business savings for business taxes, because you have to file basically 2 things. You have to file your business entity taxes, and then you'll get a K-1, and then you have to file your personal taxes. I know this turns into like an accounting session, but definitely you'll need 4 if you have an entity set up. Does that make sense?
Yes, thank you.
Mm-hmm. So you'll need to download the MREA chart of accounts. Talk to your team lead if you don't know how to access that. It's also in the book. Get a copy of the book. I highly recommend everybody read that book. It basically teaches you exactly how to run this business. I mean, the book is old, but it's tried and true and it works.
Now, one more question.
Sure.
So the reason we advocate for having a business tax account so that we keep money aside for taxes and we don't end up overspending so that we don't have money to pay the taxes at the end of the year. Is that the only
Right.
reason? But if
No,
we,
so you don't want to hire a CPA for the purpose of only for them to file your taxes. That's not a good CPA. A CPA ideally should be someone that helps you strategize on how to save more money on the business side. You know, like what are the things that you need to do to save more taxes? Like for instance, you know, like if I made a lot this year and I'm gonna owe a lot of taxes, well, there's ways that you can talk to your CPA where they'll say, well, you could do this and then that'll save you like $10,000 or, you know, things like that. So you should find a more of a tax strategist versus just a accountant that's filing taxes, whatever you give them.
okay, sorry.
Yeah.
My question was specifically for having a business tax account, a bank account for business taxes.
Oh, okay.
So the reason we advocate having a separate business tax account so that we keep enough money to pay those taxes at the end of the year, right?
Right.
If we just keep one account and we make sure there's enough money in it, that we don't necessarily need two accounts for the same business.
Sure. I mean, like if you are, I mean, that's just the model to keep things easy for you. But let's say that you're just very, you know, you're very financially cautious and you only want to keep it in one account or, you know, just two accounts, you can, right? It's just know that it's going to be more mixed. You won't know the exact amount, right?
Yeah.
And that would be more personal. Of course, we want to make things easier for people. Yes, it's more accounts to manage, but at least you know this is taxes, this is expenses, this is exact, you know, and that's exact amount that's in there. So
you're just being proactive,
right?
Setting it aside just on your W-2, the employer already deducts taxes. So something.
Right,
like
exactly.
Okay.
But if you're sole proprietor, you know, also, you know, for write-off purposes, when your accountants review your file, you're not, because, you know, you can't write off personal items as an expense, right, when you file for taxes. So it makes things easier when you have it separated, where you can pull up that account, says everything here is expense, and you don't have to sort them.
Right. Now, I was definitely having separate personal and business accounts.
Okay.
But within business, having more than one account, that is what I was trying to understand.
Oh, yeah. So yeah, you don't have to within the business, but again, if you have an entity set up already, most accounts comes with a, you know, checking and a savings. You know, it comes as a dual package anyway. It's easy to just, yeah.
Got it. Okay, thank you.
Let's see. Again, we kind of went over the importance of CPA. The attorney part, you don't really have to talk to anybody now, but it's recommended at some point when you're making a lot of money, you would definitely want a CPA, I mean, an attorney as well. So you want to set dates to calculate and pay your estimated taxes. Don't wait until the end of the year. Try and pay your taxes quarterly. Estimate based on, you know, whatever it is, you know, because if you overpay, they will refund you, right? But if you don't pay until you wait until the end of the year to file and you have to pay that big amount, there's actually interest involved in that for not prepaying some. It's not a whole lot, but you're still paying extra money that you don't really need to. And also, if you pay them quarterly, at least it's out of your mind. You don't have to think about it. Then prepare your future for insurance, savings, and investments, obviously. And then the daily success habits. So the goal of our time together is to help you think, feel, act, and use what you've learned to ignite your passion and help you achieve your big why. So I'm just going to ask you a few questions. I believe this is on your participant guide on page 12. how has your thinking changed and what ideas or mindsets were new from this session? Anybody?
It's really good.
Okay. So a lot of good points here. I mean, some of the things I knew before because I had a small business set up many years back. But looking at it from a real estate business perspective is different. Thank you. For me, the aha moment was paying yourself a salary. And that's what I kind of try to dig deeper into. But yes, so much good information. I noted down a lot of bullet points on the business setup and the tax advantages and all that stuff. So thank you very much.
No problem. Thank you. If there was someone else that had a comment.
Oh, I was just going to say it's really good to just know the ideas on how to do your taxes. I know even me doing taxes years ago, it's hard to
Yeah.
kind of differentiate all this and get it all set up. So it's really good information.
Sure. I mean, once you have it all set up and going, you'll see like the benefit of it. But I know in the beginning, it could be, it's kind of like a new task and an additional task that you need to do, right? So what do you feel differently about, or what was meaningful to you today? I guess that's kind of similar to the previous question.
What I felt was that, well, I'm just getting started type situation. I've always wanted to plan ahead and be ready for the unknown. Prior proper planning prevents poor performance. But the whole situation of setting up a checking account, I haven't gotten around to that. And I've actually been worried about that because it's something that I know I need to do, but I haven't had any transactions yet. I haven't had a check come to me yet. So you saying until you start making money or until you start having that situation, it's really pointless, or not pointless. It can be a waste of money if you start setting that kind of stuff up, like the LLCs and so S corps, so forth. You kind of lifted a little bit of weight off my shoulders, and that's what I'm trying to say. I mean, I'll have the checking account set up with no issues, but I was worried about the LLC and setting up my own business corp and so forth.
I wouldn't worry about the LLC, the business corporation right now, for you for just starting. But I would go open up a separate bank account just to keep business and personal separate. Because then you don't want to wait until you receive a paycheck, right? Now you don't have a bank account to put that paycheck in. Now you're scrambling to open up a business bank account. But what most people do end up doing is when they receive that check and they stick it directly into their personal account. So I would recommend you to open up a secondary bank account. It would just be under your personal name, but separately. But you will know which one, set aside which one's for personal, which one is for business spendings.
No, I'm just want to be on the safe side. I don't have to tell them that it's for a business or anything like that. Because as soon as you start saying something that's a business, you start looking at higher end interest rates or a minimum balance. And so forth.
No. Yeah, you'll just open up a separate personal bank account. Just for the purpose of keeping your things separate. And you're still going to file as a sole proprietor. It's just easier when tax season comes that you could just pull the business expenses from one account versus trying to sort it through the same account. But you don't need to tell them it's a business entity. You don't need to set up a business entity right now at this point. And you don't have to worry about that part.
All right, thank you.
How will your behaviors be different going forward, and what actions will you be taking to moving forward?
For me, just being more intentional about my financial check-ins, time blocking for it, being systematic about checking it.
Okay, so those are the you're gonna kind of have to set up the model and the system for you to make yourself accountable. That's what it sounds like.
Yeah, just making sure, like frequency-wise, that it's
Sure.
intentional, it's planned ahead, like every month on this date, you know, I'm gonna go through and check in on
Yeah,
this thing.
definitely. Make that a habit. Okay, so now that we're done with the financial basics, this is something that you guys have been going over on every single session. Just as a reminder, you guys really need to do 10 contacts added a day, 10 conversations a day, 10 handwritten notes, and 10 home previews per week. Are you guys doing that? Anyone?
Trying, but
Trying.
hey, yeah, question. I do have a business account set up, and I did set it up with a fictitious business name.
Mhm.
That's not really a bad thing, right? I haven't made
No.
any sales at all either, and
No.
I just got minimal money in the checking and the savings, like $300 each, and that's okay, right?
Oh yeah, that's totally fine. It's just if you don't have a business, a DBA set up or anything, you know, you want to put it under your personal for the time being, and then just make a self-mental note which account is for what. You know, for Gregory, he could do that. But if you already have your business entity set up, not an entity, excuse me, your business banking account set up, and it's not an entity, that's totally fine. You're just, you know, you're still a sole proprietor. You guys are still filing taxes exactly the same way, and there's no difference there, right? The entity side is purely for the IRS and an actual business setup. Right now, you don't have that.
Okay.
So, I mean, you're doing it correctly, so you don't have to worry. Of course, you guys have to practice your scripts and lead generate, and that's the number one thing that I stress to everyone that I talk to. You could learn a lot about everything that you're, you know, learning in Ignite and etc. It could get a little overwhelming, right? And it will feel like, oh, I can't get things started because I have all these other things that I need to do. Take your time, but just don't forget to lead generate. Okay, everything else is going to come in order as you make money and as you have your business. But number one thing that I stress the most is lead generate. And of course, you need to practice your script so that you can internalize what you're going to say. So when the time comes, you're ready for it, and you're not going to definitely do it with confidence as well. I think you guys have script practice in your offices. Find out what their times are. Make sure that you do your 30-minute practice. As a note, please do not call people on the do not call list. We definitely don't want to get cited for that. We will get in a lot of trouble if we do. So make sure you cross-check the numbers that you call if you are doing any sort of cold calling. I do recommend, as new agents, to focus on your sphere. Personally, 95% of my business come from sphere, and it doesn't necessarily mean it has to be only friends. I actually don't do a lot of friend business. If they come, you know, they come and do it, fine. But doesn't mean that you cannot get referrals from them. So you dig into your sphere, you meet new people that way. Okay, you're building new relationships because you already know people. So so that's where most of my business come from, is through referrals. Do 1 hour of lead generation at minimum a day if you can. Not if you can, you definitely need to. And that way it will ensure that you will succeed in this business, to be honest. Because that's the one thing. You could learn all the models and get everything down, but if you're not lead generating for 1 to 2 hours a day, all of that setup that you did doesn't mean anything. So lead generate. And of course, the second part to that is the follow-up. You could lead generate and then get all these people that's interested, but if you forget to follow up, you'll lose that business. So make sure you also follow up as well. And practice writing contracts. As new agents, I know that, writing contracts can be a little scary. So that's why you got to practice writing them. At least get to know the basics, right? So once you have the basics down, every transaction is going to be slightly different. So when you do come across the transaction, it's easier for you to just focus on the little details of per transaction. The basic items, you'll be able to go through that with less than 10 minutes if you practice. Because once you write a lot of contracts, the offer really shouldn't take you longer than 10 to 15 minutes to draft out. And again, when you do your lead generation, make sure that you put all your leads onto command. If you have any questions on how to use command, there is a command support chat box that's there. There's also a lot of training available on Connect that's pre-recorded. And make sure that you do your success list every day. I do my morning routine is I write down exactly what I need to do for the day. And then at the end of the day, I check to see what have I finished, what did I not finish, and why I didn't finish. And then I put that down for the next day so that I don't let go, I don't forget anything. Because there's so many things going on, it's extremely easy to have things fall through the cracks. And if you enjoyed today's training, here's a little survey. If you could put a survey for me, that would be great. And if anybody have any questions, feel free to let me know. I'll put my contact information on the slide. So here's my email and my phone number if you guys want to reach me for any questions. That's it for the day.
Thank you, Tina.
Thank you, everybody. Have a good one.
Thank you so much.
Thank you.
Sure.